Okay, we are live. Thanks for joining us today. We are continuing our perfect home selling process. We're going to chat about things to consider when looking to accept an offer. You've got your home on the market and now you're receiving offers. There are a lot of things to consider. Not all offers are created equal. There's definitely some things to be aware of, to watch out for. The worst thing you could do is stumble and go back on market. So we want to get the right buyer, the right offer the first time. So we're going to talk about kind of more things to consider, to watch out for and be aware of, but certainly things that would indicate strengths in the offer to move forward with. Or spend a lot of time on pre-qual versus pre-approval letters, and then just get kind of into some details and actually take a look at a purchase and sale agreement and specific things to consider. We're going to bring on our co-host here, Chase Hodgson. How are you doing today, Chase?
I'm doing fantastic, Jerod. How are you?
I'm good. I'm good. Oops,
Hey,
let me
good.
adjust this camera. There we go. I think that's a little bit better. Um, yeah, thanks for joining us because really, the rubber's going to meet the road as to whether this is a qualified buyer or not, right?
hmm
And
Yeah, for sure.
and we've talked a lot about that the process, the home buying process, is a little uh, inverted or backwards from what it used to be. Buyers get qualified, get a budget, go buy a home. Now it's find a home, fall in love with the home, and now go figure out if you can afford it.
Yeah, yeah, it makes it difficult. I can't tell you how often I get purchase contracts at the same time I get applications, and
Yeah,
that's the tough part. Lending regulations change pretty often, um, and so you want to be ahead of that. You want to make sure you qualify for what you're trying to purchase. A lot of times borrowers think they qualify for more, or actually, I think what you and I see the most is that don't think they qualify at all, or not for enough, right?
yeah,
And so that process should really start on the financial side and be pushed towards a lender so that they can get pre-approved first and go through that process. That way, if you run it, you know that you're approved when you're shopping, so you can submit a stronger offer. And then if there are things that need to be addressed before you make an offer, right, you're way out ahead of it.
yeah. Yeah, well, you're hitting the nail on the head as far as my concern and best representing our seller is, once you fall in love with the home and the purchase contract's already put together and that seller's taken their home off the market, and now the lender's feeling a lot of pressure to generate a prequal letter, right? Because, some may accept the offer before they get the prequal letter, or some listing agents haven't even really looked at all the details of the letter to see, has this really been a highly qualified buyer, or did I just kind of rubber stamp something to get it over to them to check the box? And now I'm, getting all the supporting documentation to make sure that this is going to work, which is not where you want to be.
Yeah, yeah, no, we see that a lot. When you do with so much stuff being automated right now, right? Like, I think my process is a little bit different than some, whereas I like to meet more than 90% of my clients face to face.
Hmm.
I think that's super important. Um, just it helps me to understand where they're at and if they're comprehending, the process and
Yeah.
all that. So,
Yeah.
but that aside, like so much of the process is automated these days
Hmm.
that you can submit an application through a mobile app or online, and you put in the income, all of those things.
Yeah.
You do a quick credit pull or a soft pull, and then you can shoot out a pre-qual letter.
Yeah.
Like that's literally all it takes. So if you get into a scenario like a lot of our price points are right now, where there's multiple offers,
Yeah.
agent called and said, "Hey, can we go up 10,000? Can we go up 20,000? Can we go up 25,000?"
Right.
Do we know? Have we calculated income? Have we looked at assets? Have we, done
Yeah.
all of that
Yeah.
in order to know exactly where the line is for your client,
Yeah. Yeah.
or if you need to fight for seller credits or whatever, right?
Yeah. Yeah, lots to consider, but well, let me do just a couple of quick housekeeping items here, and then we can roll right into the meat of today's episode. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection, also known as MHC Realty. Our sponsor for today is the Perfect Home Selling Process. We've partnered with Chase in regards to offering some credits at closing for appraisal fees on the purchase, on your downstream purchase, as well as we're going to help with the pre-listing home inspection on the My Home Connection side. And then we've just been developing over the last couple of decades here all of these tools and other tools to help make the home selling process as fluid, as seamless as possible, helping make that transition. So we've just brought a lot of tools to bear, and we'd certainly welcome an opportunity to chat with you about what we could do in your specific case. If you'd like to take advantage of the no obligation consultation and just have a conversation, we'd love to chat. Well, with that, let's chat about. So we're looking at it from a home seller's point of view, and the thing they want the most is an offer, right? Because the whole process of kind of getting your home on the market and wanting to know how it's received is a little anxiety provoking, and as soon as you get that offer, it's a little bit of validation, and you can be in a state of anxiousness or heightened feelings or emotions, and now you get this offer, and really that's the time when you got to start applying a lot of logic. Not just, now I can start making my plans to move into my next to my next house or my next location or my next objective. So really it's not just simply here's an offer, what's the offer price, and if it's in my ballpark, I want to move forward with it. It's not that cut and dry. Specifically from your end, you already touched on it. Is this buyer truly qualified or just rubber stamped to buy that house? What do you do to best, if in a perfect world, what would you do to make sure that you've provided a level of confidence in your buyer's ability to buy my seller's house?
Yeah. Well, it's literally just taking the time to go through everything, right? So every lender has to go through automated underwriting, and you have to have a certain amount of documentation to do that. But you're not required to have pay stubs and W-2s or tax returns, right? They can put their income number in there, and you can still get a pre-approval, right, through automated underwriting. The difference is if you get into the nitty gritty, right, or if an offer gets accepted, do they have the cash to close, right? Are you scrambling to come up with that?
Is it sourced in monies?
Right. And or is it cash in a wall or under a mattress? And surprisingly enough, we still run into that every day.
Right. Or I make X dollars and they're correct, but they haven't been in the job long enough, or it's commission based, or it's any manner of things that makes it inaccurate from your point of view. Correct.
The income is probably the biggest one, is going through pay stubs or tax returns or whatever, right? Because I deal with a lot of self-employed borrowers, and they make a bunch of money, but there's this catch-22. It seems like at some point the IRS decided, they got with and I don't know this to be true, but this is my feelings, that they got with Fannie Mae and Freddie Mac and said, well, if they're not paying taxes, then they can't afford to buy a house, right? So if you're not showing enough income in the right places on your tax returns, it doesn't matter how much money you're making, right? We can't qualify you for a conventional loan. You have to look at other methods like non-QM, which are higher down payments, higher interest rates, more expensive for the borrower, all of that stuff, right? So there's typically solutions, but are you working those solutions out during the process? Are you confident enough to negotiate for your client, right? Or to allow the realtor to negotiate for your client in a proper manner, right? Without risking their earnest money or whatever that may look like.
Yeah. So let's just use an example of like an online lender. Somebody submits all their information and it kicks out a pre-qual letter, and they give it to their buyer's agent and they go and submit it. Um, for me as a listing agent, I'm going to look at this thing with all kinds of, conditions, exceptions, um, reasons why this isn't worth much more than the paper it's written on, because there hasn't been, would you call it like a manual review and looking for the supporting documentation and verifying that everything they said. Again, they're not lying. These buyers aren't lying, but they're,
You
there's
don't
just
know.
a,
You don't know, right?
right.
You don't know the guidelines. You don't know what's required for income calculations. You don't know, what's required as available assets and things like that.
Yeah. Yeah. So let's say, let's give them some benefit of the doubt that they've, done some of this verification and all that, kind of what you would receive in the way of an offer, whether it's a VA loan, FHA loan, conventional loan. We're looking at things like, how much money they putting down. Obviously, the more they're putting down, the more time they've spent, putting themselves in a financial position where they can, afford the home. They either set aside some reserves, or I'm just saying there's strength in the contract that can be identified by virtue. And actually, let me pull it up here because I'll give you an idea. In a purchase and sale agreement, we actually get to see. So this is a 9-page document. This is an offer in Idaho. It's a state form, and this will show what kind of loan it is, how much they're putting down, kind of an approximation on the interest rate. So we have a pretty good idea of what it is that this buyer is bringing to the table. And this could be a by the skin of your teeth thing, or it could be,
Yeah.
no, this buyer is well positioned to buy the house.
Yeah.
And that may or may not factor into whether or not this is an acceptable offer or not. This offer price here may sound good, but if all the other things around this offer are kind of on the fence, you might want to pass on it or find a way to strengthen it up.
Yeah. Well, and you may have other offers in there that have the same purchase price, right? But they don't have they have stronger, those other factors are stronger in their favor. They're putting more money down or whatever that may be.
Yeah, or even if these are, somewhat similar, the letter that I would get from you, I'm going to have a higher degree of confidence for a number of reasons. One, you're a local lender, of which, I can go down and talk to you face to face. You work in the community. There's no way that you're going to want to create a bad name in the community because you can't, close loans, either close them or close them in a timely manner, right? These are the things as a listing agent that I'm going to take, very close look at is, if it's a lender I'm not familiar with, if it's out of state and this thing doesn't happen, no harm, no foul to them, right? Because
Right.
it's about volume and quantity for them. I'm going to, not that I'm going to encourage them to reject the offer, but it's going to be a factor,
Right.
an attribute associated to the consideration of the offer. So anyway, just wanted, and I'll come back to this here in a little bit, but I guess I just wanted the audience to know that just because you get a pre-qual letter in your inbox that accompanies the purchase and sale agreement I just showed you doesn't mean that you're golden.
Yeah, it doesn't. And then there's, in all fairness, even when you've gone through the pre-approval process, looked at all the documentation, vetted, like, things can still come up in the loan process once you go to, get deep into with manual underwriting or, with a physical underwriter and things that come up. So you try to mitigate that as much as possible. And, you could tell if a deal is going to be hard up front. And so you try to let everybody know how
Yeah.
that, what it looks like. But the biggest factor is just taking the time before you make the offer to get with your lender, to go through all those documents and know where you sit. I think for me, it just helps the realtor out so much.
Yeah.
right? Like you don't know what kind of situation you're until you start shopping. You don't know what kind of situation you're going to get in, and if you don't know where the where the endpoints are for your client and what they're capable of doing, they really shouldn't be shopping in.
Yeah. Yeah. And, we don't want either the buyer or the seller to get jammed up, right?
No.
Once you're in contract, all of a sudden, wheels start getting put into motion, moving trucks and commitments to dates and things like that. And nobody benefits realizing that a buyer can't buy the home. Yes, we're talking to sellers today to help them identify whether this is a good offer, mainly because if this does fall back on market, in Idaho, you've taken your home off the market, it's gone from active to pending. Eyes are taking off of your home because it's under contract.
Right.
That buyer pool is now looking at other properties, not yours. And
Hmm.
if something doesn't come through, the issue of stigma these days is real.
Yeah.
Why did this one come back on market? And sometimes it's not as easy as to say, hey, buyer's financing fell through, you know, um,
Yeah.
because you've looked away from that property, and to get buyers to come back to it is hard to do because they already kind of wrote it off in their mind, like, oh, that one's gone, or I don't know why I wasn't interested, or you know,
and and we're currently in a space of increasing inventory, right? Like rates are higher. Um, we've seen inventory pick up, which is not a bad thing, but people have more to choose from. So yeah, if you pushed buyers away from this because it's off the market or went pending, then yeah, there's definitely a cost to that seller for it.
yeah, yeah. Anyway, I don't want to beat a dead horse here, but I just uh, they're not all created equal. It's worth the time, even to the extent that I, as a listing agent, I've asked you several times, and you're always open to it. Hey, can the listing agent call you for our buyer?
Love that.
Most don't, which is really weird.
Yeah.
But I, as a listing agent, unless that offer is just solid, even in that case, I might still call, but I'll call the lender up on the listings or on the buyer side, the loan originator, and say, hey, how confident are you in this file, this transaction, and this buyer? Obviously, there's only so much that an LO can disclose. But
Right.
you can get a really good sense, right? If somebody's him-hawing around and kind of, gets a little squirrely, and you know when they're on the fence and haven't done their work.
Well, and it's simple as like why are they only putting 3.5% down? Why you know what I mean? And try and again the loan officer can only say so much, but like you said, you can kind of get an inkling. And for personally, I like to initiate those calls. I'm with you. Not enough listing agents do that. But I like to if I've done the whole pre-approval process and I'm confident in my buyers, then I want to call as soon as the buyer's rep tells me that they've submitted an offer. I want to make that call,
Yeah,
right?
yeah,
If I'm confident in my work, then I want to help them make sure that they have the strongest offer they can put forward.
yeah, yep, absolutely. Let's go to some hidden cost here, and there's a myriad of things that could come up in this case, in this scenario. But one of the big ones that I wanted to kind of share is that can be fairly easily overlooked is, yes, there's a purchase price here, and then there's some items surrounding that purchase price, but really you've got to scroll down quite a bit because this is a very popular issue these days, or request, I should say, and that is a seller concession. Quite often, buyers now are asking for a seller concession to help with closing costs. And if your home is on the market, let's say 500,000, and everything looks clean, but now all of a sudden you come down here, or you didn't come down here, and see that they're asking for 3%, 6%, 10 grand, $15,000, that changed the calculation significantly.
Yeah, a little bit. It can be substantial.
Yeah, and there's not many these days that aren't some form of seller concession, right? Um,
Yes, a lot of
es-
it for sure.
Especially these days, if you come up, these are new to our forms here in Idaho, and to most other states as well. And bear with me here because again, it's fairly new. But you're gonna be asked for interestingly, some help with paying for the buyer's agent commissions.
Yeah.
Right. That used to be kind of predetermined and published in the multiple listing service, and kind of in the background and acknowledged by all parties even before you get into the state of putting in an offer, negotiating an offer. I apologize. I'm just kind of thinking and then trying to process this all at the same time. But literally, there's new line items here asking right here for, I don't think you can see my mouse, can you? Anyway. So, this percentage is now presented front and center as to what that buyer's agent commission is, and that the seller is going to pay it. So, just looking at the purchase price is in and of itself isn't going to tell the whole story. And then, by the way, sorry guys, this grid matrix here breaks down a lot of the other costs associated to a transaction. Who's paying closing costs? Who's paying appraisal fees? Who's paying some title insurance? Who's covering issues such as septic inspections or well inspections? Like, there's a bunch of costs here, and that all needs to be taken into consideration. I, as a listing agent, would take this, put it into a net sheet, factor all this in to give you that bottom line number, so that you can make an educated decision as to your takeaway of selling your home. Right? We've identified this as a legitimate buyer, and now we've identified that this is a legitimate or an acceptable offer for you as a seller in the way of what you want or deserve, need in the sale of your home.
Yeah. Yeah, and I think while you're in there, like for clarification, because the financing, like that you brought that up earlier, financing contingency was always been used getting out, right, of contracts, not getting out, but like if financing fell through at a late date, it was still a valid excuse to get your earnest money back. Mm-hmm. But they've put something, right? They've changed that recently to where you put a date in somewhere here, right? That says past this date.
Yeah, it's right here. So this is a really good point, Chase. This defaults to 7 days prior to close. And what that means is a week, 7 days prior to the close date, all contingencies are lifted. So you as a seller would want this to be longer than a buyer. A buyer would want up to the last minute to be able to terminate the contract should something go south. A seller would want all the contingencies lifted sooner than later, so that if something happens, they either get earnest money or they can put it back on the market. So, and that's a really good point, because there's a lot of other dates and nuances to consider within a purchase and sale agreement that I think are kind of glossed over or even flat out ignored, right? Most people just hit on the highlights and not some of the other sticking points that could cause issues.
Yeah, well, and that goes back to making sure that you've done your due diligence and that you are qualified when you're making offers, because right there in the contract, right, like it's pretty clear that you're risking your earnest money if we don't get this thing done in time.
Yeah, yeah. Another biggie here while we're here is, is this a contingent home sale, right? So we're talking about contingencies. Here's a buyer. The more contingencies they have, the more options that they'll be able to walk away. If you had no contingencies or just a few and you cleared those contingencies, the more solid the transaction is, and the more higher degree of likelihood that if for some reason it was to fall apart, that the seller, are going to keep that earnest money. But if they got contingency after contingency after contingency, that's not necessarily a very attractive offer. Contingent home sales, man, there's a lot to that. Maybe we should have its own episode, but really, do you want to take your home off the market as a seller while somebody else is selling their home? Right? I would often discourage that but for the case where I absolutely knew for a high degree of confidence that that listing agent on the other end knew what they were doing. It was going to be
Right.
marketed well, priced well, that they could adjust pricing if they need to, how aggressive they're going to be, what
It's
the
at a price point that is selling pretty quickly currently. Like,
what are
yeah,
the
all
days
that.
on market, all of that. Yes.
Yep.
And we are seeing more contingent home sales these days. So I know we're, kind of deviating a little bit. We've been talking about pre-qual, we've been talking about hidden costs, but now we're talking about other kind of, I should put hidden considerations or, you know,
Yeah, because
bigger considerations than you would initially think.
they're technically not hidden costs, right? If you're working with a professional realtor and that knows what they're doing, then they know where to look, right?
Yeah, then they should all be broken down, right? They should take this offer, right? Because if you take an offer and you as a seller is just doing rough math, okay, I think I'm going to sell the home at this price and I think I have a rough idea of what my costs are. And then I commit to this thing and I don't realize there's this massive seller concession or, that I am contributing to X percent of the buyer's agents or the buyer's agent commission, you know, um, you got to know all that. So a net sheet is super helpful for that.
Yeah, yeah, absolutely.
So let's see. So I guess we're already kind of touched on this. What makes for a weak offer. Certainly the things that we've talked about. But one of the main reasons I put this here is because we do get a chaotic enough market that we sometimes will see an agent on my team saw it just a week ago, threw in a massively strong offer immediately out of the gates. And I asked him, why? Why so strong? Yes, we're kind of there, but we're kind of not there. And I asked him what their why was. And they really didn't have one other than the homes had been going so quickly. So, which translates to, I just want to tie it up and make a decision.
Yeah,
I'm gonna I'm gonna put in my offer. I'm gonna get into contract, and either I know because my agent told me, or I make an assumption that during my due diligence period, you know, I can
yeah,
terminate the contract and walk away. You know, so here you as a seller came in, hot on the market, got a home positioned well, presented well, buyers coming to it, and then boom, it's gone because you took it off pending for a buyer that was just trying to tie it up to figure out, you know, the buyer hadn't even come into town to see it. It was a FaceTime showing.
yeah.
So go ahead. You had a question there?
Well, I mean, it all goes back to the same thing, right? Like you want you want to be able to put your best offer forward. You want to know what you can offer, like by getting pre-approved, going through the whole process. But then, it's all for naught if you're not careful with that information, right? Like,
Yeah.
so I tell I you know I get borrowers all the time that be like, oh, just send over a pre-qual for what we're qualified for. I'm like, no, no. I'm not going to do that. We're going to wait for you to make an offer, right? We're going to talk to your agent. We're going to tell you what your max is you can qualify for,
Yeah.
and then we're going to wait till you make an offer, because if you make less, you don't want to send out a pre-approval letter that says you qualify for more, right? Like you want somebody working for you that knows how to negotiate, that's really good at it, and that's going to fight for your interest.
Yeah. You're
So
buying a home at 480 and your lender kind of not lazy. I shouldn't say that, but for lack of a better word, kind of lazy lender sent you a pre-qual lender for 500,000. You're negotiating is a little limited, right? It's like, well, you're not going to lie to them and tell them, that they don't qualify anything more than the 480 that they're offering. But it's pretty
no,
obvious that, you know,
yeah. Yeah, and so yeah, it's a whole plan, right? Like it's not just get pre-approved and shop. Like there's a whole process between the lender and your loan officer, and what you qualify for, and so you have a plan of attack so that not only you get the house you want, but you get it for as close to the price as the best price
yeah,
that you qualify for. So it's a Yeah, there's a reason that people, still do this job, because it's needed, right? There's a lot of there, we talking about beating a dead horse. We talk about how complicated all of this is, um, and why realtors still exist and why loan officers still exist, because it is a complicated process.
Yeah.
Um, and you need somebody who knows what they're doing out there fighting for you.
Yeah, well, we've talked. Let's see, there was a couple things that popped in my mind, but it is a relationship business, right? So some people are of the impression that this is becoming a transactional business, and there's a lot of things that have sped it up and make it more efficient. But to just get that pre-qual letter from an automated system doesn't tell the whole story. So we just I won't rehash that. So it is a relationship, and it's a human interaction. The human is making this judgment call here, and I think that will always be the case.
Yeah.
The case in point, the story, the scenario I just described to you, by all indications, this buyer is perfectly qualified to buy. They had a good down, they had a good loan, they had I'll say a decent lender. There were some issues I had with it, but for the most part, I don't see any reason why it wouldn't held together. But a computer or anything else isn't going to identify that there wasn't a big enough why there.
Yeah.
So that's up to us as listing agents to say, this seems strong, but they're asking you to do something that I wouldn't recommend you do because I don't think they're committed to it.
Right.
And they weren't. They rescinded it.
Yeah. Well, and I mean, to go along with that, like I literally signed a couple yesterday, young couple, second house, found it, found it off market, a family that was doing an estate sale, and got their agent involved and everything, but ultimately they were able to buy and close on this house because of the relationship they built with the person's family that were doing the estate sale, and the emotions you talk about, they come into this still.
Yeah.
Right, knowing how to, and they weren't the best offer, they just weren't.
Right.
But the family wanted them to have the house.
Yeah.
And so that kind of stuff still comes into play. And again, I hate to get too far off topic, but man, it just leads down that, there's more and more information available all the time, right?
Mm-hmm.
You talk about AI, you talk about replacing me, replacing you, because all the information's out there. But the thing is you can never remove the human element from it.
Right.
And all the information is never going to be there, right? It takes boots on the ground to gather all the information. And people may disagree with me, and maybe at some point it will be different. But I know in Idaho, we're a non-disclosure state, and we have, different levels of homes built right next to each other, right? Subdivisions that overlap in their quality of construction. If you don't have boots on the ground going in, and you're just pulling information off the internet, that limited information that you have, those may seem comparable, and you may over offer or under offer for a house, right? That's worth more because you don't really know what goes into it.
Yeah. Yeah. There's all kinds of nuances that just, good experienced agents that have your best interest in mind on the selling side or on the buying side is going to keep you out of the weeds, is going to see issues before they arise. Because mid-transaction's the last time that you want, you told your landlord you were leaving, you accepted a job, any number of big decisions made because you think you're under contract, in the sale of your house or the purchase of a house, and then things don't come together.
Yeah.
I think you would want an agent that would put themselves in your shoes that says, hey, if this thing fell apart, what would this do to my life?
Yeah.
And quite often it's a big thing because a lot of things, like I said, have been put in motion.
Right. And what liability am I open to? Because now the seller's incurred costs too, right?
Yeah. So that's a thing, right? They're, just to throw in an offer, and tie the property up, One, that just doesn't sit well with me, and it was clearly the case because I had the agent press the buyer's agent a little bit more, and then they're like, "Oh, wait a minute, okay," you know, just kind of firm things up, and they just weren't willing to do it.
Yeah.
So anyway, again, there's a lot of nuances to a transaction that a good listing agent is going to help you identify all that. And then when you accept the offer and you get into escrow, you can feel good about your home going pending, that you didn't stumble, you're not going to fall back on market and wonder why 30 days, 60 days, 90 days later, you're still on market because you've got a stigma on your property and buyers aren't looking at it anymore. And because
Right.
it's a real thing these days.
Yeah.
If
It
buyers have
definitely
seen
is.
it on the market for more than a couple of weeks, they wonder what's wrong.
Yeah. Even though that's us, like, reverting back to a normal market, but yeah, it'll take some time for people to understand that, right?
Yeah, yeah. They're used to it being gone in a weekend, in the first or second weekend. It's kind of crazy.
Yeah.
Yeah. So we've blown past the half an hour. The last thing I would say, just real quick, is under additional considerations is, going through this purchase and sale agreement and the offer in its entirety with your listing agent, to make sure that you fully understand what the implications are of all of these things, right? Again, there's 9 pages here. So any manner of these could not sit well like I would prefer. This is just an example that
Hmm.
the buyers have read the CCNRs, and
Right.
they indicate in the offer that the CCNRs have been reviewed. The costs are of the setup fee and the quarterly or annual cost, monthly cost, whatever it is, taken into consideration. Because what if they've got that boat that they've got to put behind the fence that they think is fine, and all of a sudden you put your house under contract and you're now pending, and they read the CCNRs and like, oh, I can't do that. I can't buy that house. I got this boat and I want it on my property. I don't want to incur storage costs or whatever.
Yeah, yeah, that's a big thing, right? That is definitely a risk that you have to weigh because, it's not even a risk, right? It's just a matter of educating yourself on that, right?
Yeah,
Because every subdivision is different. Some are way more strict than others, and you just don't want to get caught in that situation
yeah,
where you can't live the life you want to because they're telling you can't.
yeah, yeah. And there's a lot of these, intermingled throughout the purchase and sale agreement. So I'm just saying, don't take it lightly. Go through it, slowly, carefully, methodically, and have a high degree of confidence that moving forward with it is truly going to have the outcome that it appears it should have based upon your initial assessment or initial look at the offer.
Yep.
So anyway, lots to consider, but we'd love to help and have those conversations with you about what that looks like.
Yeah, absolutely.
Well, as always, Chase, we appreciate you being on, sharing your lender perspective, your appraisal perspective, and just your general, real
Yeah.
estate knowledge. And I always forget the economics side of things. I keep forgetting you're kind of that economist brain guy. So, and that's tremendously valuable as well.
Yeah. I mean, as much as anyone can be, that it is what I studied in college, but economics is a moving target for sure.
Well, that's why it's important to have somebody that's keeping an eye on that, not just you know, oh, this is what I think should happen today, and totally miss these big moving things that are going on, because there's a lot of that these days.
I feel like we're all missing lately though, so
We're all what?
we're all missing.
Yeah.
Like it's hard. Like we're in times that it's really hard to
Yep.
forecast what's going on and what you expect, and so
Yeah.
yeah,
Yeah. Well, very good. All right. Thanks again, Chase. We really appreciate it. And other than that, we'll just wish everybody a blessed one. Take care.
take care.